Fresh off his panel in New York, we have Peter Hug with us today. Next. Peter, thanks so much for being with us today.
You're welcome, Daniela.
Good to be back in the studio with you. So tell us, what was the sentiment like in New York? You were a speaker at the Inside Commodities Conference. I know that Nouriel Roubini was also a speaker.
Well, Nouriel stayed true to course. He's still bearish the metals, and thinks by the end of 2014 that gold at $1,000 an ounce is still a real possibility. Some of the other members that were speaking on the metals had the other view that because of the debasement of the dollar, the monetary easing that the Fed has indicated that they were going to continue, geopolitical risks, and so forth, they indicated that they thought gold would be more likely candidate up at the $1,550, $1,600 level by the end of next year.
Okay.
So it was a mixed bag.
Right. And how much were people still talking about the Fed announcement?
Yeah, I think not so much. I think they were still getting over their shock and their surprise. I mean, I really do believe that when they saw Bernanke come up on Wednesday, that they were expecting a message that he was ready to taper. And when he said no, I think that caught the market off guard, and that caused that major rally that happened on Wednesday afternoon going into Thursday.
So, Peter, how do you think gold will react here? Do you think it will follow the raw commodity sector, or is it acting more like a safe haven asset right now and could rally? Well,
you know, if we take the debt ceiling debates off the table, which I mentioned this morning in my commentary, these guys in Washington are they just blow my mind that they're going to take us back to the precipice that we saw in 2011. I'm betting that they're going to settle this this childish drama that they've created, and that there will be a debt ceiling extension. And if you take that off the table, with some of the geopolitical risks that have now started to soften, with you know, Iran looking more conciliatory, Syria looking like at least we're talking, we're not firing missiles. And I think the U.S. economy is ahead of the European recovery. I'm skeptical on the strength of this market. I don't see a lot of conviction to take these prices higher. I've been somewhat bearish this gold market over the past week, without having, you know, the guts, so to speak, to aggressively short it ahead of this debt ceiling negotiation.
Right. But can we really take the debt ceiling off the table, Peter?
Well, we can't, but that's my point. That's why I think there's some firmness in the market. Yesterday, they tried to knock the market down under 1312, held support, made the shorts nervous. They rallied it back up to 1337 this morning. It opened there, and now it's weakening off a bit.
But there was so much enthusiasm with gold right after the Fed announcement. But was it just ahead of itself?
Well, actually, ahead of the Fed announcement, there was a lot of bearish sentiment in the market.
Right.
They really did think the Fed was going to taper. And
so Bernanke surprised the market.
Yeah, and the market's not convicted. Here you have Bernanke, the Fed chairman, basically telling everybody, and you know, we've been saying this, I can't remember how long I've been saying it, but it's got to be over a year, that I didn't see the Fed moving till 2014. Fed said the economic data does not justify tapering. That was Bernanke's talk. And then Bullard on Friday comes out and says, well, you know, we might taper a little bit in October. I mean, an asinine statement for him to make, but he makes it, and then the market reacts the other way. This market is not convicted, and I think tapering is expected psychologically in the market somewhere down the road, and I think that puts a cap on the upward momentum on the market.
All right, so if we wrap it up now, Peter, you said you're bearish right now on gold. Does that also spill over into silver?
Yeah, and you know, bearish, you know, if you had to use the word bullish or bearish, I would have to use the word bearish, but I'm not an entrenched bear. I just think this market doesn't have the conviction to take it up through new highs. So I'm looking for gold to lose the 1312 support, assuming this debt ceiling fiasco doesn't get out of hand like it did in 2011. If that scenario is accurate, if that comes to pass, I can see gold then testing back into the mid-1200s, which in my opinion would take silver probably into the high teens.
Excellent. Thanks so much, Peter. Thanks for being with us.
You're welcome, Daniela.
And I'd say we'll see you next week, but we'll be in Rome covering the LBMA.
Yeah. Have a good time.
So we'll see you when you're back.
Okay, bye-bye.
Thanks for being with us, and thanks for watching this edition of For Pete's Sake. In the meantime, you can watch this preview of what's in store next week as Kitco News heads to Rome to cover the LBMA. Thanks for watching.